to you, Julius. What do you think Victoria market will work on in the new capital gains tax environment?
It depends on where you buy in Victoria. So at this stage, a lot of investors will. So there, it's about the sentiment as well. So there are a lot of investors who are struggling to afford the property due to the multiple reasons. The few reasons are like higher the interest rate payments plus the land taxes plus all the other state taxes. In Victoria, when you look towards the regional Victoria, there are few good pockets which are not impacted because of the Victorian government policies yet. So for an example, if you go towards the Wodonga, if you go towards the Bendigo, part of the Shepparton, Latrobe, it's okay. Towards Melbourne, I can see there is a lot of distress within the population because of the two main fundamental reasons. Number one is property prices are not growing because of the fact that the land prices are not growing, and there is significant amount of land which is going to be released in pipeline. Also, there are a lot of houses which are being built. The two different things. So basically, at this stage, the new construction which is coming up in Melbourne with the new home and land packages, the prices are still in between $600,000 and $650,000. 4 or 5 years ago, the similar type of properties were selling at the same prices, and the biggest reason behind it is because of the supply of the land, which is still coming into the pipeline. Because of the higher supply, property land prices are not growing. In Sydney, the property prices grown. Adelaide or Perth or Brisbane, they grew because land prices have become double or triple in last 5 to 6 years. In Melbourne, what I've seen is basically towards the western side or northern side, wherever you see a lot of supply. In 2018-19, the prices were very close to $400 or $500 per square meter. They're still touching $600 per square meter. There is a marginal upsize into the land prices. That's why the Melbourne property prices are not growing at this stage. Holding is extremely tough because of the land taxes, because of the lower yield, because of the higher vacancies. So rental rises are not happening. More properties coming into the market. That's why market is a bit softer, and there are more and more investors are putting properties into the market. So at this stage, buying a property in a Melbourne's northern or western corridors are not good as per my analysis. It might have an impact later, or probably there will be time when the Melbourne will come into a mainstream, but not at this stage. Then when you look at the Victoria as a state, regionals will do a little bit better, but not exactly into the Metro Melbourne. Metro Melbourne, yeah, there are a few pockets which are dominated by owner occupiers. Like if you go towards the Glen Waverley, yes, there is good demand. Go towards the KC Council, there are a few pockets which has good demand. Wherever you see a owner occupied demand, these pockets might sustain. But wherever you see the higher investor demand, there are a lot of investors in the market, a lot of land supply which is coming up, which is not good for the growth.